and welcome to the Market Rag for Sunday, December 30th, 2007. Last one of the year, you guys. Not too much happened in the market, which isn't that surprising since it's the holidays. We got real light volume and just not a lot of players out there. The one interesting area are the commodities, and you can see we had some good moves here, 1.5% in bonds and over 2% gold. And these are some interesting charts we'll take a look at. As we look here at the broad market indexes on the sentiment grid, you can see again a lot of yellow, not a lot of conviction out there, and that's shown by the sideways action in the charts. All your green remains to be this commodity area. The problem is you'll notice we have a few extreme high signals on all these, the euro, oil, and gold, all being up here at the very top of the ranges. Small caps have come back pretty good over the last 4 weeks, but notice again overall trend is pretty ugly, with everything else being dead in the middle. The main theme is still kind of the same here. We are going sideways, and right now we got about this 1500 level on the S&P that is right in the middle of the middle. Really weird stuff goes on in this area, you guys, so don't read too much into it. We have basically an identical situation here on the weekly chart of the Dow. The Nasdaq still trying to keep this uptrend intact. You can see the euro here had a nice bounce back, and oil still hanging around this all-time high area, and we're back above it. Gold's looking really strong as it takes out these small pivot points right here on a weekly basis. And the bonds are still chopping around this line in the sand we have here. We're back above it. So we do have to be somewhat bullish on this. As we take a look here at the sector sentiment grid, pretty much the same song and dance here. You'll see our good areas energy being green all the way across the board. We're starting to get some life here in the telecom area. Besides that, everything else is either sideways or pretty ugly. You'll see a lot of this kind of orange color here in the semis and transports. Financials are a no-brainer here, red across the board along with your consumer discretionary. We do have healthcare starting to fall along with the utilities into the lower part of their short-term ranges. Transports seem to be struggling down here, and we'll see what they do when they end up around the 75 area. Semiconductors are now back down to this support range. Looks like we've got a nice little pullback, but if it starts breaking this center point, I think our next stop is going to be down here near the 28 level. Here's telecom, which is showing a little bit of life in the short time frame after this big rebound we've had. This is still sideways. I'll be a little bit more excited about this group if we can get above this resistance. Basic materials are still looking pretty strong here. We just need to break this resistance point. Real common theme with the stronger sectors in the market right now. Energy is one of the best sectors out there like we saw on the sentiment grid. We've got a nice uptrend here, and as you can see we've cleared this prior high, which means our next high will be higher. That's what we're looking for in a good uptrend. Financials are still struggling. This group has been taken apart and just cannot get any strength under it. Being under our support area here, which should now become resistant, I've got to be bearish on this. Consumer staples is staying above our resistance area and hanging in there right now for the time being. One of the stronger looking areas in the market right behind energy. Healthcare is an interesting group because it's pretty much yellow across the board on our sentiment grid. And you'll notice here it broke our resistance area with this big move up and then just instantly failed. That's not making any of this group look so healthy. And here's your consumer discretionary. This along with the financials are the weak ones. We got a little bit of room here down to this support area. Well, our portfolio kind of got cleaned out there the last 2 days with the down move in the market. I ran some pretty tight stops and just wanted to book some of that money. As you can see here, we only have 3% of our account working right now, and that's in the new short we took, NCTY. That's also where we have all our risk, and you can see here from a closing R standpoint, we're up a little on that trade, but nothing great. This is more or less, we're flat the market right now. To kind of sum this up, I'm going to go with a 0 rating here for the time being. Until we get into next year when the volume comes back into the market, I would expect more crazy action than anything. You guys enjoy your new year, and we'll talk to you next year.